Hi, this is AJ Brown with Trading Trainer on the afternoon of Sunday, August 26th with your Trading Trainer weekend edition of your daily insights. What we're going to do here is take a look at the broad market by taking a look at representative indexes of our watch list, namely the Dow Jones Industrial Average, the Nasdaq Composite Index, and the Sp500 Index. We are also going to take a look at the New York Stock Exchange Composite Index and the Vix Volatility Index. And because it is the weekend, we're going to take a look at both daily and weekly charts. But before looking at any charts, we're actually going to log into the Trading Trainer Learning Community web portal by going to login.tradingtrainer.com. And of course, once we've logged into your Learning Community web portal, I'm going to direct you right to today's Daily Insights tab and further to the Recommendations subtab. Take a look at the recommendations we have for tomorrow, which is Monday, August 27th's trading session. Slight changes in these recommendations could have major impact on your trading. You are also going to find here a link to our audio commentary. This is the audio where I take you by the hand through today's Daily Insights and its subtabs. Go ahead and click on that link. And audio is going to start playing automatically in the background in another browser tab or another browser window, depending on how you have your browser configured. Go ahead and listen to that audio the first time you do click through today's Daily Insights tab and its subtabs. It will make sure you hit all the high points. You can always drill down deeper on your own after the audio is over. When you listen to the audio commentary, please pay special close attention to the opening and closing comments. In the meantime, for this particular broad market analysis of this Charts of Interest video series, let's go to the Daily Insights tab and the Index Stats subtab. Our trading bias is neutral bullish. Our industrials, shown by the Dow Jones Industrial Average, gained 0.52% this past Friday on light below average New York Stock Exchange volume, and gained 0.47% this past week on light below average New York Stock Exchange weekly volume. Our technology stocks, shown by the Nasdaq Composite Index, gained 0.86% this past Friday on flat below average Nasdaq Exchange volume, and gained 1.66% this past week on flat below average Nasdaq Exchange weekly volume. Our large caps, shown by the Sp500 Index, gained 0.62% today, or this past Friday, and gained 0.86% this past week. Moving on to our secondary indexes, our 100 best stocks out there, shown by the S&P 100, gained 0.58% this past Friday and 0.8% this past week. Our mid caps, shown by the S&P 400 Index, gained 0.4% this past Friday and 1.24% this past week. Our small caps, shown by the S&P 600 Index and the Russell 2000 Index, two different perspectives on our small caps, gaining 0.35% and 0.50% respectively for this past week, and gaining 1.77% and 1.93% respectively for this past week. Our New York Stock Exchange Composite Index gained 0.51% this past Friday and gained 0.71% for this past week. Our Vix Volatility Index fell 3.38% this past Friday and 5.14% for this past week. Our gold ETF gained 1.75% this past Friday and 1.81% for this past week. And our oil ETF gained 1.12% this past Friday and 5.41% for this past week. Team, let's take a look at our economic calendar. We'll go to our Daily Insights tab and our Economic Calendar subtab. The first thing I'd like you to do is I'd like you to go to this past Friday, August 24th's day, and read the Market Reflection Summary. Then I'd like you to go to tomorrow's Monday, August 27 day and read the Market Focus Pointers. This should be something we do at the end of every trading day. At the end of every trading week, including this weekend, I'd like you to go to Monday, August 27 and read the International Perspective Report followed by the Simply Economics report. These two reports are must-reads as they summarize what happened internationally and domestically for the past week and forecast what's to come for the week ahead. I'd like you to read these two reports and thoroughly understand and be prepared and grounded for what's about to come compared to what has happened. Let's go back to Friday, August 24. The durable goods orders was released. In June, new orders were up 1%. We revised that number down to be up 0.7% this go around, and for July, we're reporting that new orders dropped by 1.7%. When you factor out the more volatile transportation sector, in June, new orders we reported were up 0.4%, 0.4%, and we revised that number this time around to being only up 0.1%. For July, we're reporting new orders ex transportation up 0.2%. Core capital goods in June came in at 0.6%, and for July, we're reporting 1.4%. Looking forward to what's coming up for the week to come, this upcoming Monday looks like it will be a calm economic news day. Tuesday through Friday, it looks like we'll have a little bit more economic news for investors and traders alike to react to. For Monday, it looks like the main reaction might be a carryover to what the Federal Reserve announced as they were leaving their annual Jackson Hole, Wyoming trip, contradicting our fiscal policy, saying that they're going to continue watching and carefully applying the brakes via monetary policy. Let's go ahead and take a look at our Trading Tools tab and our Watch List subtab. We had quite a few tickers identified by our option trading candidate filters. The ones not highlighted in yellow are already on our watch list. They are simply reaffirming their position there. The ones highlighted in yellow are new to us. We will evaluate those for liquidity and patterns before adding them permanently to our list. Going to our Trading Tools tab and our Daily Picks subtab, here you'll find the Trading Trainer Daily Picks Report Generation tool. We'll do a deeper dive on our indexes by looking at volume and trends. Our indexes look to have similar volume on Friday that they had on Thursday, slightly lower than their 50-day volume simple moving average, definitely lower than their 200-day volume simple moving average. The oscillator about the same. Short duration trends are clearly bullish. Long duration trends are neutral to bullish. Backing this up, here we are going to take our template algorithm filters. These mathematically go through whatever raw data they are presented with, looking for patterns in the numbers. We're going to present them with the raw data of the index tickers. That is going to give us an idea what the broad market personality is doing, as well as what to look for in our watch lists. Our reactive templates are logging, or I should say, our trend continuation templates are logging long-term bull trends. However, the signals for a trend continuation are not quite there yet. Looking at our short-term trend template and our trend reversal template, clearly we've been bullish for about a week's worth of trading. And taking a look at our pattern alterations, our Bollinger Band Width Index is getting tighter but still in the mid-range with 4s, 5s, and in some cases 9s and 8s. Our bar counter looks to be in single digits in some cases, but for the technology stocks, the Sp500 and the Sp100, we're still in double digits, hinting at some channeling. The question is have we entered a bull trend? Let's take a look at some charts. We'll go to the Trading Tools tab and the Charting sub-tab. We'll start with a quick review template, which is a 6-month daily chart with a linear scale and open, high, low, close bars. And to that, I like to add my 30, 50, and 200-day simple moving averages. These lagging indicators help me determine trend. I have those simple moving averages added to the quick review template here in a user-defined template in my personal profile. I'm going to apply that user-defined template to the indexes, specifically starting out with the Dow Jones Industrial Average. First thing I'm going to do is take a look at the weekly 2-year chart. Here we can see that indeed the Dow Jones Industrial Average seems to be trending up. This past week was a little bit of a doji week, which means that we opened and closed just about at the same price level. And in fact, it looked to be a low activity week because the highs and lows were not too extreme either. In fact, weekly volume was very low. It's as if investors are making the most of the last week of summer. Still, it looks like we have a beginnings of a bull trend. We have some overhead resistance to break through, but if we continue slow but sure, that could happen as we pass Labor Day and get into the fall season. Switching to a 6-month daily chart, our 200-day simple moving average, 50-day simple moving average, and 30-day simple moving average are all trending up. Our volume this past week was low, including this past Friday. It looks like on Thursday and Friday we were coming down off of a high, or I should say Wednesday and Thursday we were coming down off of a high. Friday it looks like we're on our way back up. Our 7-day simple moving average is trending up as well. Let's move to a 5-minute chart. Our 5-minute chart shows decline on Thursday. Our 5-minute chart shows decline on Wednesday and Thursday. Thursday it looks like we see some bottoming out intraday price action. Friday we see a pop-up at open and through the whole morning session, only to stagnate in the afternoon session into professional hour. Back to our daily chart. Let's take a look at our notes. We closed at $25,790.35. Our low was $25,688.58. We'll take a note that says closed above support. Resistance. We have now a higher high and a higher low. That means our daily polarity moves to full-on bullish. Our weekly polarity has a higher high and a higher low. Actually, it has a lower low and now a higher high. We'll keep our daily polarity marked as, we'll keep our weekly polarity marked as testing bull. Our overall trading bias is neutral bullish till we break through our overhead levels of resistance, but we're knocking on the door of full-on bullish. Let's switch to our Nasdaq Composite Index. We'll go with a weekly 2-year chart. We can see here that the Nasdaq this past week did regain after about 3 weeks, 4 weeks, 5 weeks of stall, some bullish momentum. It did so on light weekly volume. Again, it seems like investors and traders alike took the week off to make the most of the last week of summer. Switching to our 6-month daily chart, you can see the 7, day, 30-day, and 50-day simple moving averages are all trending up. The 200-day simple moving average is trending up as well. We are testing levels of resistance here. We do have a higher high following a higher low. Our trading bias on the daily polarity is bullish. Let's take a look at the 5-minute chart. We can see the stall on Thursday. We can even see the stall on Wednesday. Friday, we saw gains in the morning session and then sideways stagnation for the rest of the day. We closed at $7,945.98. Our low was $7,907.10. We're going to go ahead and take a note that we closed above resistance. We're going to keep our neutral bullish trading bias for now till we break through overhead ceilings. Moving on to the Sp500 Index, the index I feel like most represents our watch list. Starting with a weekly 2-year chart. We are wrestling with all-time highs, but we're doing so on low volume. Again, we'll see what happens when investors and traders alike return to their trading session. Still, we've got higher highs and higher lows, so our polarities remain bullish. Our simple moving averages are all trending up. Looking at our 5-minute chart, we can see the stagnation in price action on the S&P 500 from Wednesday and Thursday, and then on Friday we see the gains in the morning session, pretty aggressive gains at that, and then the sideways price action for the end of the day. We closed at $2,874.69. Our low was $2,862.35. It looks like we need to adjust our levels of support and resistance. We'll look again at the weekly 2-year chart for some guidance. It looks like resistance will be at $2,875 and support at $2,800. Remember that using our Fibonacci price retracement lines and our rule that a good trend is at 1.236 of a retracement, 2,875 is a significant number for the S&P 500, being a 100% retracement, and 2,950 is a significant number for the S&P 500, being that key 123.6% retracement. So let's watch those numbers carefully as we approach both 2,875 and 2,950. For now, as we are trying to wrestle with 2,875, the 100% retracement, we'll keep our trading bias at neutral bullish until we're clearly above. Switching to the New York Stock Exchange Composite Index, looking at a weekly 2-year chart. This is the one index that has been stagnating all this time. It looks like we're wrestling with resistance at 13,000. Let's look at a 6-month daily chart. Clearly, the New York Stock Exchange is stuck with heavy overhead resistance. Let's look at the 200-day simple moving average. Still, everything is trending to the top side. We're wrestling between neutral and neutral bullish. I'm going to leave this particular secondary index's bias at neutral for now. Switching to the Vix Volatility Index, going to a weekly 2-year chart with a 40-week simple moving average. We can see that the implied volatility over the past week is clearly lower than the mean, but has not broken through support that looks to be around $11.85. We actually closed this past Friday at $11.99. Let's switch to a 6-month daily chart. Here you can see that the implied volatility fell for most of the week and actually pulled down ever so slightly the 200-day simple moving average. The 200-day volume simple moving average is analogous to the 40-week volume simple moving average, as there are 5 trading days in every trading week. Our Vix Volatility Index ended down 3.38% to close at $11.99 per VIX share. Our overall trading bias still remains neutral bullish, as we are actually knocking on the door of full-on bull. The broad market personality, I'm going to stick with testing overhead resistance. Our market is responding to the following, including but not limited to transient external stochastic shocks, U.S. fiscal policy, U.S. Federal Reserve monetary policy, monetary policies of China, Europe, and Japan, the price of oil, U.S. economic news including employment, housing, manufacturing, and retail, and market news including mergers, acquisitions, initial public offerings, public companies going private, and earnings. That's all I've got, team. Please take care.